In the ever-evolving landscape of financial markets, exchange-traded funds (ETFs) have become a popular investment vehicle for both retail and institutional investors. While passive ETFs, tracking the performance of a specific index, have dominated the scene, a notable shift has been observed in recent years. Actively managed ETFs, once a niche market, have seen a surge in popularity, signaling a paradigm shift in investment strategies. This article delves into the growing prominence of actively managed ETFs, tracing their evolution, exploring the factors driving their success, and examining their impact on the broader investment landscape. Actively managed ETFs, a brief history. Active ETFs have been in existence since 2008, but their true potential began to unfold in 2019 when the Securities and Exchange Commission, SEC, eased launch restrictions. This regulatory shift paved the way for an influx of actively managed funds into the market, marking the beginning of a new era. According to Morningstar data as of June 2023, the number of active ETFs has surpassed 1,100, underscoring the growing investor interest in actively managed strategies. The SEC's role in shaping the landscape. The SEC's decision to ease launch restrictions in 2019 acted as a catalyst for the proliferation of actively managed ETFs. By providing fund managers with greater flexibility and reducing regulatory hurdles, the SEC facilitated a more conducive environment for innovation in the ETF space. This section explores the specifics of the regulatory changes, their impact on market dynamics, and the subsequent surge in active ETF launches. The rise of actively managed ETFs in numbers. Examining the data reveals a significant trend. As of the current year, the number of active ETF launches has outpaced passive ETFs by a ratio of 3-to-1. What factors contribute to this trend, and how are investors responding to the expanding universe of actively managed options? This section delves into the statistics, analyzing the growth trajectory, asset inflows, and investor sentiment surrounding active ETFs. Understanding the appeal. Why actively managed ETFs? Passive ETFs have long been favored for their low fees and broad market exposure, but actively managed ETFs offer a distinct set of advantages. From the potential for alpha generation to the flexibility in portfolio management, this section explores the reasons investors are increasingly drawn to actively managed strategies. Interviews with fund managers, financial advisors, and industry experts provide insights into the decision-making process behind choosing actively managed ETFs. Challenges and criticisms, addressing the skepticism. Despite their rising popularity, actively managed ETFs are not without their skeptics. Some argue that active management introduces higher costs and can underperform passive strategies over the long term. This section examines the criticisms and challenges faced by actively managed ETFs, addressing concerns related to fees, transparency, and the ability of fund managers to consistently outperform the market. Innovation and customization, the unique features of active ETFs. One of the key attractions of actively managed ETFs lies in their ability to innovate and adapt to changing market conditions. From thematic investing to ESG, environmental, social, and governance considerations, actively managed funds have demonstrated a capacity for customization that passive funds may find challenging to replicate. This section explores the innovative approaches taken by active ETF managers and their impact on portfolio construction. The role of technology in driving active management. Technological advancements have played a pivotal role in shaping the landscape of asset management, and actively managed ETFs are no exception. This section investigates how technologies such as artificial intelligence, machine learning, and big data analytics are being leveraged by fund managers to gain a competitive edge. Case studies and expert opinions shed light on the ways in which technology is transforming active management strategies. Risk management in actively managed ETFs. With greater flexibility comes increased responsibility in risk management. This section delves into how actively managed ETFs navigate the complexities of risk, exploring the tools and methodologies employed by fund managers to mitigate potential downsides. Case studies of successful risk management strategies and lessons learned from challenges provide valuable insights for investors considering actively managed options. The impact on traditional asset management, a paradigm shift. The rise of actively managed ETFs is not only reshaping the ETF landscape but also challenging traditional asset management models. This section examines how the growing popularity of active ETFs is impacting mutual funds, hedge funds, and other traditional investment vehicles. Interviews with industry experts provide perspectives on the evolving dynamics and the potential implications for the broader financial industry. Investor education and awareness, navigating the active ETF landscape. As actively managed ETFs continue to gain traction, educating investors becomes crucial. This section explores the initiatives taken by financial institutions, regulatory bodies, and industry associations to enhance investor awareness and understanding of actively managed strategies. The role of financial advisors in guiding investors through the complexities of active ETFs is also examined. Conclusion: the future of actively managed ETFs. In conclusion, the rise of actively managed ETFs represents a significant evolution in the investment landscape. From regulatory changes to technological innovations, various factors have converged to fuel the growth of active strategies within the ETF universe. As we look ahead, this section offers insights into the potential trajectory of actively managed ETFs, addressing questions about sustainability, market dynamics, and the evolving preferences of investors.